How's it going, you guys? Welcome, welcome, welcome. Today we're going to talk about stochastic RSI. For those of you that are coming back from my RSI video, awesome. This is the next place to watch. For those of you that haven't watched my RSI video, go back and watch my RSI video, or else this is going to make no sense to you. RSI and stochastic RSI work in conjunction. Stochastic is a indicator based off of RSI. So without a grounded understanding of RSI, you're not going to know shit. So go watch that, come back, and then we can talk about RSI. For those of you that did watch that video, welcome. Let's talk about stochastic RSI. Before we start, if you are from the Biscuit Box, I'd like it if you liked, commented, subscribed, all that good shit. If you are not in the Biscuit Box, join the Biscuit Box. It's 100% free, always, forever. I do daily market updates. We have an interactive voice chat with other traders who are looking at the market as well. The only thing we care about is profitability without that weird dick measuring or incel energy that you get out of a lot of crypto spaces. So if you're looking for a place to learn for free, mind you, maybe catch a trade or two, get better at trading, learn a little bit about crypto, and not get rinsed over and over and over again by other people or yourself, come join the Biscuit Box. So what is stochastic RSI? Stochastic RSI is an oscillating indicator that is based off RSI that is a little faster, that can tell you when the current bounce or the current dip is nearing exhaustion and we're getting close to a reversal. So if you can see here, you can see how when the stochastic RSI gets high, we kind of dip a little bit, then the stochastic RSI gets low and we bounce. When stochastics get to 100, we are overbought. When stochastics get to 0, we are oversold. Not only that, but you can watch stochastics after you enter to understand whether or not you have more room to make more money in that position. We'll get into all of that in a second. Let's get into the first part, is identifying overbought / oversold stochastic. So what is overbought / oversold stochastic? Overbought / oversold stochastic refers to when a asset is moving either up or down and that specific movement is nearing exhaustion and there might be a reversal. So for instance, when we get oversold and the stochastic reaches 0, that implies that that move is nearing exhaustion and there might have to be a nice little bounce. As you see here, we reached a stochastic RSI of 0. We messed around in this area for a little bit. After a while, the stochastic RSI crossed and we started moving up until we reached the overbought band. Now, when we hit overbought, we tend to reach 100 on the stochastic RSI. And then after a little bit, maybe it's 1 or 2 candles, we start to go down. So if you are trying to understand how to time a bounce a little bit better, or figure out when the bounce or a dip might end, or figure out how to enter in the most optimal area, your stochastic RSI is going to be integral because it moves a whole lot faster and it's a little bit more pinpoint than your RSI. You'll be able to tell by how the stochastic's moving whether or not it's going to keep moving up or down. It's just not enough looking for overbought / oversold conditions. You have to look at the relation and where the price point is the next time the price does get to overbought / oversold again. What I mean by that, if you were to open a long over here when we were oversold, this little bull div, remember RSI tells you where the move is going or where it might end. Stochastic tells you the pinpoint accuracy of that move. So we printed a little bull div right here. Stochastic reached oversold at the same time. I would have entered a long. When I did that, I would be watching what happens the next time we reached overbought, then oversold again, or thereabouts. If we don't reach this oversold region and the price doesn't go lower, that means that my long's probably going to be good. You want the price to be higher the next time the stochastic RSI is oversold if you're taking a long. And that's how you know there's more dugga, there's more energy for up. So if we keep on getting higher whenever we're oversold, the next time we're oversold, there's room for up. And inevitably, we go up more. We keep on printing higher lows and we go up more. On the flip side, if you're looking for a short, right, you enter based off of RSI printing a bear div or getting RSI getting weak. In this instance, we're sticking around in this middle band, but hey, we got to 70, and then the next time we got to 65, which is a bear trap RSI. And from there, we started a nice little pullback after we hit overbought. We went down, we went overbought again, and the price was not higher than the last time we were overbought, which means that this move is going to start weakening. And as you can see, it does weaken until the RSI catches some support, and then we start bouncing up, and then you could use the oversolds to figure out if we're strong or not. So those of us that are interested in scalping and you just want to make a little bit of money here and there, focusing on smaller time frame stochastics might be the way. You can get in, get out. You don't really have to worry about much risk. You just enter an oversold to overbought, or you enter an overbought to oversold and just yeet yourself out of the position. But for those of us that are looking for the most optimal swing in the market, we have to focus on higher time frame. Just like charting, just like RSIs, just like everything else, the higher time frames are king. The smaller time frames are the heartbeat to which the higher time frames move. So if you are focusing on higher time frames, you will do so much better, and you will understand the actual true heartbeat of the market than if you were just to open up a 9-minute, 15-minute chart and just try to trade based on that. The people who focus on higher time frames will end up with a higher wallet balance. The people that focus on lower time frames will end up with a lower wallet. Let me explain to you the reason why. So on lower time frames, there's a lot of point A to point B. There's a lot of zigzags. There's a lot of yip yaps. But when you open up a higher time frame, like the daily, the 3-day, or the 9-hour, you tend to see a little bit more about what's being concealed in the overall movement. So for instance, I like to open up a 9-hour. And if we go back to that same area that we were talking about earlier, we'll see how the 9-hour actually shows us a clean oversold and a clean overbought, right? If we were to go back down to the 9-minute, there's so much zigzags and yip yaps that you're probably going to lose a whole lot of money if you're not focusing on what a higher time frame is saying. So one of the best things for me that I find to watch for the actual swing or a bounce in the market is the 9-hour. If you don't have the 9-hour, the 12-hour works just as good, but I like the 9-hour. The 9-hour is absolutely goated. When the 9-hour is oversold, 9 times out of 10, we have a bounce. When the 9-hour is overbought, we have a dip. Any of the rules that I've said for the low time frames for stochastics, RSIs, the same applies for higher time frames. And the same thing applies with the stochastic movement. So even on the higher time frames, we're looking to go from oversold, overbought, and back to oversold higher than the last time we were oversold. If we can go to oversold and stay above like 86, there's probably a good chance we truly do reach oversold, print a low around 86, which would inevitably be a higher low, and then we go up again. Because crypto's a bouncing ball, and it's a higher time frame bouncing ball, and because a lot of people don't focus on higher time frames, they lose a lot of money. If you were to focus on higher time frames, at least the 9-hour stochastics, you would end up being able to set yourself up for better positions than if you were just to wake up in the morning and be like, oh, well, I'm going to throw up a long, throw up a short. So basically my rule of thumb is this. If the 9 hours are overbought, I look for shorts. Once the 9 hours are oversold, I don't look for shorts anymore. I probably look for a long. If the 9-hour can reach oversold higher than the last time, I probably have to close my short because we're probably going to keep going up. But if it can break the boundary that we were last time, my short is good and my longs are not. So if you have the patience to wait for a higher time frame stochastic to reach overbought / oversold, you basically just have to zero in on lower time frames. And once those gas out as well, so if the 9-hour is oversold, we're expecting a bounce up, I would then go and zero in on the 3-hour, the 51, the 27, the 9. As I go from the higher time frames to the lower, I want to see the 9-hour shift from oversold, then the 3-hour reach oversold, the 51 reach oversold, the 27 reach oversold, the 9 and the 3. Once the 3 reaches its apex of oversold, we tend to start that push up. From there, you're watching stochastics also ladder up, reach overbought, go down, reach oversold lower, and keep pushing up. Because what that would do is it would transfer a lot of the energy to the 9-minute, and then we keep going up through the 9-minute, then the 27, then the 51, then the 81, and then sooner or later, the 9-hour starts to reach overbought, and we look for the short. You use the same thinking. You go down, 3-hour overbought, 51-minute overbought, 27, 9, 3, find the nice little area. Also, you should be charting, create some higher time frame supports and resistances, create some good little trend lines, and I promise you, the amount of times that you will reach overbought / oversold when you hit one of these trend lines, or you break out of a trend and you can look at a higher time frame and be like, oh, well, we have more room. We're probably going to break out even higher and we can go to another area. So this is super important that you guys understand the whole laddering process down for time frames and the whole laddering process up. Remember, the smaller time frames feed into what the larger time frames are doing, and when the larger time frames have moved to their areas, you have to wait for the smaller time frames to gas out. Once the smaller time frames gas out, they all reach overbought / oversold, the swing starts. All right, so we're gonna go over some things to look out for when also looking at stochastics. Sometimes when you're looking at a stochastic RSI, it can do some crazy shit like go up, reach the overbought band, and then extend. Something to look out for, especially for you scalpers, just entering at 100 every time you see 100 might wreck you. This is why you have to focus on what higher time frames are doing and what higher time frame stochastics and RSIs, what those candles are doing. Because if we're getting breakout candles, yeah, we're going to extend on some stochastics for a while until those higher time frames do inevitably get overbought / oversold. The smaller time frames might be the heartbeat and the thump of the move as the move goes, but the higher time frames are the ones that control the overall move. And whenever I see a stochastic extend, I usually know that there's a higher time frame above it that is controlling a move. Like for instance, if I see a 9-minute start extending, I'm maybe going to switch to the 27 or the 51 and see what those stochastics are doing, seeing what the RSI is doing. If the 51 is extending or looking like it's going to keep going up, I'll switch to the 3-hour, seeing what the 3-hour is doing. If the 3-hour looks like it's also extending, you go to the higher time frame above it. All it is figuring out what time frame. And that's why when you guys see me stream, you see me, you know, I'll stream on the 9-minute just because it's like the easiest to see like what's happening. But for the most part, you want to always flip through different time frames, especially the higher ones. Like the 9-minute will end up giving you a good trade for maybe like an hour 45, and if they want to extend it, maybe like 2 hours. A 51-minute will give you a better trade for about 4 hours. If you base your trade based off of a 3-hour, you could possibly get like a day or two, and so on and so forth. For the 9-hour, I noticed that I tend to get maybe a week out of a good trade, at least a couple days, 3 or 4 days on the short end, and if they want to extend it, a week. And then I use the stochastic actions, gauge whether or not we're going to keep going up or down. Ultimately, you're going to use the higher time frames. You know, we got overbought, went down, got overbought again, lower, we're probably going to keep going down. Boom, same thing. Now we reached truly oversold on the RSI for the 9-hour. That hasn't happened in a very long time. Have this little bull div. Now that's another thing to look out for, are bullish divergences on RSI, on the stochastic RSI. When stochastic RSI doesn't go fully to overbought or oversold and starts to curve up, you're going to see how price kind of stalls, and then we're going to go up. And at that point, you want to enter. You'll see a crook start to form, and at that crook, that's usually when the price is going to start giving its way. So right here, we reached overbought. We went down, oversold, went back up, didn't truly cycle to overbought, but we started dipping. We have a bearish divergence here on the stochastic. So boom, it kept going. So these are some things that you should look at and always look out for. Sometimes a bearish divergence is always bull trapping before the next little push down. Keep in mind that all of your RSIs, all of your stochastics, all of the extremes should always line up with higher time frame supports and resistances, and you'll see how you'll catch great positions if they do. You know, look for areas that we built support, look for areas that we built resistance. Do have a YouTube video on it if you want to look at how to do it. You'll be surprised how many times I'm looking at RSIs, I'm looking at stochastics, but I'm waiting for the price action to hit my higher time frame support and resistance first. And then if the RSI and the stochastic are reaching overbought, oversold, the volume looks like we had a good amount getting to that area, and the volume then lulled out, boom, I enter. It's really, it's easier said than done, harder to put into practice, but once you get good at it, it makes it very, 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 very rewarding. I'll just squeeze this in here real fast. Another thing to look out for is when stochastics print double tops or double bottoms. Sometimes, and this goes for all time frames, sometimes a stochastic will just go down a little bit. We won't break down through the 70 band. Once we go usually below 60, there's a good chance that we'll actually cycle down to oversold. But if we can't go below 60, there's a good chance that we run the risk of crooking back up, crossing, and creating a double top. And if we keep on doing that, the energy goes up on any given time frame that you're watching. And what are we doing, guys? We're switching to a higher time frame. Yes. So right now it looks like the longers have stopped the energy the shorters have gained, and the 51's going up, the 3 hours going up on the stochastic, the 6 hour looks like it could go up, and the 9 hour has more room to go down, but the 9 hour stochastic looks like it's creating a bullish divergence. Remember what we were talking about earlier, where you have to look for little crooks before they start? So if the bulls show up with volume, RSI stays well, we get above this 50 band, go watch my RSI video if you don't know what I'm talking about. But if this RSI can keep going up, we get good volume here within the next 24 hours. This closes up. We created a bullish divergence on the 9 hour, and we're going to go back up to cycle up to overbought. At that point, we created support higher than the last time, and we're most likely going to go up, probably break this area. We could possibly go retest 100, with the ultimate area being around 103.4 to 103.8. That's just a little mini market outlook, but that's what I think might happen. We definitely haven't really done anything crazy on this weekend, and that's given us a good little breather for when the market opens. We could definitely get some good volume and close the stochastic and push it up. But if we do not get good volume and the bears show up real tough, there's still room for us to go. Remember, 100 is overbought, 0 is oversold. Don't estimate it either. If you always have the patience to wait for a stochastic to reach truly overbought or oversold, you'll most likely get the most optimal position, and that doesn't matter on any time frame. Just remember, smaller time frames, smaller timed positions, larger time frames, larger timed positions. So I don't want to get too long-winded when explaining things about stochastics, because it could get very convoluted very fast, and this is supposed to be an introduction to stochastic RSI, and I don't want people to get too confused. So we're going to keep this here, and I will make another video for another time breaking down stochastics a little bit harder. Now, I'm going to end this with a warning for any of the new traders watching this. Most of you novice traders do understand this already, but the new people need to understand this. There is no such thing as a magic indicator. There will not be an indicator that you can use that will make you magically profitable. Indicators are tools in which the trader uses to confer their theory. If you are taking trades based off of just indicators and you have no understanding of price action, or you have no understanding of market structure, the sentiment going on, you're going to fail. So for me, taking a trade is all about higher time frame supports and resistances, stochastic RSIs, volume flows, and how all of that comes together every time we do go up to one of those higher time frame supports and resistances. If you do know how to chart, if you learn how to make some trends, if you understand a little bit about that, you can then add RSIs, stochastics, volume, trending, Watsons, Ichis, EMAs, it doesn't matter what it is, but the first thing you should definitely have is a grounded understanding of the price action of the asset that you are trying to watch. If you cannot look at a naked chart and be like, I understand what I'm seeing, you don't need indicators yet. Maybe understand a little bit about candle structure first and then add in a little bit, because all you're going to do is you're going to add everything thinking you're going to have a crazy chart. You're going to be like, oh my God, I'm the best. I'm crypto Nostradamus. You're going to think you're going to have good positions, or you're going to think you're going to have a good thing, but you're relying too hard on indicators that are lagging and they don't take into account live volume. At the end of the day, one of the true things that only matter is the amount of money that flows into the market when those orders are opened. That is it. Order books don't work. Heat maps fucking suck ass. It's live volume, higher time frame supports and resistances, and then how the RSI stochastic react in that area, and then whatever little sprinkle of chart indicators you want to add to help you with your accuracy. But if you take little steps to first understand these indicators, don't just throw yourself into it, but watch for a while. Watch this video and then watch Stochastic RSI, and then things will start making sense. That's my little tip for you guys. So if you like the video, give it a thumbs up. If you dislike the video, how about you suck my dick with your ass? This shit's a lot harder than it fucking looks, okay? With that being said, I will see you guys in the next video. If you guys are looking for a Discord, my Discord is 100% free, 0 paywalls. Everybody's a VIP, daily market updates, learning resources, an interactive VC. Other traders you can bounce ideas off of, other areas that you can put your ideas out there, see if you're right or wrong. At the end of the day, if you're looking for a place to actually learn how to trade and be self-sufficient, the biscuit box is for you. Stop paying for Discords that get you rinsed when you can join my Discord for free and learn how to trade. With that being said, I will link an invite link down in the description. For those of you that are looking for streams, I stream every day on Twitch. Also link that in the description as well. So I stream every weekday. And yeah, thank you for watching this video, and I'll see you guys in the next one.